Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Alex Mashinksy, CEO of Celsius Networks. We're going to discuss building a crypto portfolio as well as getting some yield from your crypto assets. Alex, it's great to see you as always. Welcome back to Trade Talks.
Hi, Jill. You're looking great despite Corona. Look at that.
We are coming to you from the garage studio in my house. But Alex, since we spoke last, I remember our last interview of 2020 was with you on December 24th. And we were talking about the significant run that we've seen in cryptocurrency. And here we are in 2021, the story just continues. So my question to you is, with so many different types of cryptocurrency out there and sort of this group investing mentality that we see, what's the most appropriate way to build a crypto portfolio?
Sure. So I think, again, the reason there is this mass rush into crypto is not so much because Bitcoin is so great. It's because the US dollar and the Fed and the government are basically printing and debasing the currency, right? So you heard of some of the most famous investors during 2020 tell you that they're all allocating to Bitcoin. And now in 2021, the world's richest people, Elon Musk and others, are allocating into, so the question is it Bitcoin or is it Dogecoin, right? Those are like so obviously every investor has to do their homework. What we think is a prudent choice is to kind of balance, have at least a 50% allocation to Bitcoin. It's a granddaddy of them all. Ethereum is maybe a 25% allocation. And then kind of take 5 projects that you really believe in, things that you think will change the future of finance, and basically try to allocate to them. Masari, which is the kind of like the Bloomberg of crypto, ranked Celsius Cell token as the top performing asset last year, and it was mostly because basically it wasn't about the allocation. It was the fact that we generated alpha, generated yield on top of Bitcoin, Ethereum, and the other top 10 coins.
So Alex, let's talk about that. How exactly are you generating yield at Celsius Networks? Because we know you're not generating any yield in traditional financial instruments or banks, that's for sure.
Right. So if you give your money to JP Morgan, you're going to get paid nothing for it. But as we found out recently with GameStop and other things on Wall Street, we realized that a lot of the market makers and the arbitrageurs are getting yield, right? They're using the same process called sec lending or securities lending to create yield. So Celsius does the same thing in crypto. We aggregate over 400,000 retail users, similar to Wall Street Bets. We have 400,000 of them. They gave us $8.5 billion worth of their assets, and we then demand yield or demand interest income from the institutions, the largest institutions of Wall Street, so they could do market making or arbitrage or all of the trading that they normally do. So just like Citadel borrows some of these assets from Wall Street participants, Celsius is the lender on behalf of this large community of retail users.
Yeah, it's interesting to play the traditional game with Wall Street firms and actually be successful with it. So does it work the same way as when these institutions are lending stock back and forth to each other? Is it safe? Are investors, can they lose their Bitcoin? I mean, it's a little bit different since it's more technology based than share based.
Right. So just like on Wall Street, the settlement is done by the DCCC, right? Basically there's a settlement agent. We act as that settlement agent. So we transact with over 350 institutions. And last year we collected over $250 million worth of interest and distributed it to our 400,000 users. So this is a large scale operation. This is not like we're doing one little trade between one guy here and one guy there. We're talking about tens of billions of dollars moving around, and 80% of that yield, up to 80% of that yield that we generate goes to the retail user. So effectively, crypto is ahead of where Wall Street is. Even though Wall Street for 100 years has been doing sec lending, there isn't a single platform today on Wall Street that you can go and earn yield from sec lending, right? None of the brokers will give you even a penny of that. So it's like the last hold of the brokers, of the basically the yield that they generate that they don't share with their customers. So we reinvented the game on the crypto side, and sooner or later we'll be coming with it also to Wall Street.
So Alex, one of the times you were on my show, I think it was January 28th, 2020. And at the time, Bitcoin was 8,800-ish, somewhere around there. And you had mentioned that by the end of 2020, you could see it going to 30,000, which in fact was a fabulous call. Do you think that we can continue to see those returns through 2021, or it might be a little bit, steady versus taking the escalator up?
Yeah, so you're right. I mean, I'm shocked myself at how accurate my prediction was. I was off by 4 hours. It hit exactly the right number 4 hours after New Year's, right? So I think 2021 is a much more difficult prediction, because even though we know exactly what the supply is, we know inflation in Bitcoin is 3% a year. So we know how many new Bitcoins are going to be added. We're really having a hard time understanding how much demand there is, which institutions, corporate and retail, are going to come and buy more. Like just one announcement from Elon Musk that Tesla is buying $1.5 billion moves the market so much. At the same time, you don't know how many of the retail holders, the people who bought the Bitcoin in 2013, 15, 17, are they going to be selling at 50,000, 60,000, and so on. So I think the bull run will continue. So we're probably going to hit something between 150 and 160,000 later this year, but I expect us to close the year below 100,000, meaning we're going to have what we call in Wall Street blowout top, and then a correction back to some kind of a support level. So Fibonacci levels are at 86,000 or 87,000, then at 90 something thousand, and so there's another one at 65,000. So there's several levels that we have to push through. And we've seen, for example, 41,000 just a few weeks ago. That was the level at which miners decided to sell something like $20 billion worth of Bitcoin, right? All miners all over the world were basically liquidating and changing hands. They were moving that Bitcoin from the guys who mine Bitcoin to the institutional and corporate buyers. So it is a much more difficult prediction, but these are the ranges that I would be looking for.
All right, Alex, we look forward to following up with you. Thank you as always for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.